Welcome back to all our listeners. This is another episode for Gold for a New Generation. Today is March 18th, 2021. Today is our ninth episode. How you doing, Steve?
Doing awesome. Very
Nice.
excited.
Nice. So, yeah, today we're going to talk about the potential volatility in gold. We want to tell you to be prepared, but be very excited for the future, short term and long term, of course. Um, Before we start our episode, I just wanted to highlight that our podcast is posted on YouTube, but as well as on the Apple and Spotify podcast platforms, which could be a lot more convenient for people to use because when you subscribe to them, the podcast will be the the podcast platform would notify you right away that the new episode is up. It could be more convenient for people to listen through the podcast platforms instead of watching the YouTube video. So just a heads up to everyone. Once again, all our content is available on all those three platforms. And yeah, we would be happy if you'd use any of them, whichever one is more convenient for you. So let's talk a little bit about. So today, what we're going to talk about is a little bit about the environment that's been going on in the US and Canada, around the world in terms of COVID, vaccinations, as well as talk a little bit about what's been happening in terms of the US and its policy making, and then talk about the gold environment and what we should be thinking and feeling about it short and long term. So, COVID has been a year since it kind of got to Canada and the US as of March ish. And since then, we've seen, about 3 to 4 types of vaccines developed and a lot of vaccine rollouts going on. So that could be good for the short term future. People getting vaccinated and going back into the economy and contributing. As of March 2021, $1.9 trillion worth of stimulus package was approved and already been sending out to people, and this is in the US, which means a lot of money being printed out. And this goes back to one of our older podcasts where we spoke if we would have a full democratic sweep, that might be one of the things that could happen, and the kind of the consequences of printing a lot of money and what that could cause. Just a reminder that could weaken the dollar because when you print more dollars, each dollar is weakened, and could cause more inflation in the future, which could be a good sign for gold. Another thing that happened this week was the Fed made an announcement about its long term interest rate perspective, and it is interested in keeping interest rates pretty low at 0.25% through 2023, even though we have actually been seeing the 10-year interest rates, 10-year yield interest rates going up day after day. So yeah, if we want to touch about that, that would be cool. And then let's talk a little bit about gold. So, gold has been slowly trending down for 6 months ever since its last peak, even touching below 1700 for a couple of days, I think in March 2021. Today it's sitting at around 1733 dollars American. We haven't really seen any dramatic drops in gold. It's just been a very slow downward trend. We spoke about taking like advantage of volatility in gold when we see huge drops, potentially because of for sellers of people who are over leveraged. That would be a good opportunity to buy, which can kind of leave people confused because after all we did see a $300 drop, which is about 15%, and if that happened fairly quickly, that could be a good sign to buy. But because it's been so slow, perhaps people were either maybe averaging down as gold has been trending down, or maybe just staying put and waiting for a huge drop. And now that we're at 1700, where do we go from here? Is this the bottom? Is it time to go all in? Should we, consider, perhaps missing out of it going up? Is this the bottom, or will it continue to go down? Will it continue to go down in a in a slow kind of way that it has been over the last 6 months? Should we still be expecting any huge drop over the next short period, or is there still a lot of leverage in the gold market? So yeah, give us a little bit of your insight, Steve.
Yeah, thanks, Raphael. I mean, that's a pretty good summary of what I'm hearing from a lot of our listeners, and I think it's important to keep in mind uh, the dramatic volatility that gold can experience. And I'm going to harken back to a couple examples to kind of put this all in perspective. And the one example that I think applies a lot to today, it's never going to be a perfect analogy, but I think it applies it quite a bit, is 2008 for gold. Okay, so in 2008 for gold, and this is something I lived through. I kind of got interested in gold uh, significantly from an investment perspective around 2006. It's something I kind of been aware of for much longer, but 2006, 2007, 2008, gold was going up a lot, and there was lots of excitement, and there was lots of kind of fundamentals out there that would seem to really push on gold. They uh, Bear Stearns, maybe people maybe remember that name, had gone bankrupt in early '08, and it was going to get bought out, and there was a number of issues. And, central banks were lowering interest rate, printing money, and on and on and on. And gold had shot up to $1,000. Everyone's so excited. Um, but what happened is people got too excited too quickly. Even though everything was working, kind of the seeds of a bigger move in gold were all going, being planted. People got too excited too early, and what did we see over the next 6 months? We saw a drop in gold about 35%. It dropped, I think it was 1,033, and it dropped in about 680 or something like that. Um, and I think that's kind of what we're seeing uh, somewhat now. We're seeing lots of positives for gold long term, but I still see so much excitement. And what I saw in '08, what really kind of I recall from '08 when what was happening in gold, and also in 2013 when gold also had a 35% drop, was we had this kind of slow burn. It was down a bit, up a bit, down a bit, up a bit, and people kept saying, is this the bottom? That must be the bottom. Oh, it can't go much lower. And they're getting, they're thinking, well, it can't go much lower. So already they're putting more leverage, buying with more leverage, borrowing money, buying leverage ETFs. And that's this, what I'm seeing right now is this deja vu moment. I follow a lot of investing forums, gold forums where people are talking about gold. I'm hearing from lots more of our listeners where, many people are starting to listen to our podcast, and it's just like deja vu. Like, gold can't go much lower. It's down $300. It can't go much lower. And, that's what we saw in '08 and 2013 when we saw 35% drops in, 6 to 12 months. It was the same kind of slow burn, can't go much lower. And then what did we see? We saw a big drop. So what I'm thinking is there's potential. It's no guarantee, but it sure feels like we're not at the bottom, that we could see another $300 drop in gold. Maybe we're only at the halfway point. That would put gold at like $1,400, maybe even into $1,300. That's, we want to make sure that people are aware that it's not guaranteed, but there's a distinct possibility and a distinct, decent chance something like that could happen. Now, you know, you don't have to sell everything, but you shouldn't be uh, frightened by that. Hopefully, our listeners are, having listened to these messages, since the summer when we started this. That there's volatility, and these things can happen. You can have a 35% drop. I'm hoping people can be extremely excited for something like that to happen. Because I've been around gold, and I've probably watched gold literally every day for like 15 years almost. I am like extremely excited because it's like, wow, this could happen once again. And I want to make sure I have a chunk of cash ready to take advantage of this if it happens. Now, again, we repeat this a lot, but there's no guarantees. But people should be prepared for something like this, but also be really excited. Because if gold say, and we don't know, no one knows the future. It can change depending on a lot of things. But if we got, gold down to $1,400, gold mining stocks would probably drop, another 30, 40, maybe even 50%. And if we can be, patient and excited if that happens, we can become, savvy gold investors, not the people that get excited when gold is jumping $200, but get excited when it drops $200, because we understand the big picture fundamentals, the big picture tectonic plates, but know that these kinds of air pockets can happen. And the reason they're happening is because someone has taken too much leverage. Someone has got too aggressive, too excited. And what's happening if this big drop happens is typically they're forced sellers. They're not selling because they want to, but because they have to. And that's what we want to be in position to take advantage of. And again, we had gold drop, as you said, drop to about 1680 or so a couple weeks ago. And yeah, then we've maybe jumped 70, $80 since then. But it doesn't, it's not, I'm not getting those feelings of, oh yeah, that was the bottom. I'm getting the sense that people are getting excited again. They're thinking it's the bottom. They're putting on, buying with leverage, and it really creates this situation where they're, a whole bunch of forced sellers. So this is, we want to talk about a lot of things on this podcast, but to me, this is the biggest thing in gold right now. If people are thinking, too many people are thinking the bottom's in, or it can't go much lower. I'm hearing those words a lot, can't go much lower. And those are like some of the worst words in finance, or famous last words. It can't go much lower. And usually when you hear that, it's like, yeah, actually it's going to go a lot lower because that means people are thinking it's not possible. They take leverage and then they get hit if it does happen. Yeah, so again, our theme today, be prepared for volatility, but be excited if it happens. Be in a position to take advantage of it. You don't have to, don't sell all your gold betting on this, but you should have, listening to our podcast, you should be in a position to take advantage of that if it happens. And, we talked, if you go back to our early January podcast, we started to see interest rates rise, and people weren't quite talking about it, long-term interest rates rising. And now we've seen a pretty good jump in long-term interest rates. And this is, you're starting to see kind of some reverberations around financial markets. Financial markets, if interest rates kept going up, or maybe even they've gone up enough, to now create, some shocks throughout the financial system. And our theme, bigger picture theme, is over time you want to acquire assets that aren't driven just by interest rates going up and down. So if we get some sort of big drop in gold, maybe associated with other financial market events, if you've got that cash and you're willing to, and you're able to take advantage of it, it could put you in a much stronger financial position, diversified position. If you're able to do that, be prepared, be excited if it happens, be patient. If you want to keep dollar cost averaging in over the next, 6 to 12 months, I think that's also a reasonable strategy. But and we're here to kind of help people become more savvy gold investors. So we're going to be here to help people do that. And the message is we're probably not there at the bottom, and there could be a much bigger drop over the next, say, 3 to 6 months. So just keep being patient and be excited if that does come to fruition.
Awesome. Sounds good, Steve. I think that's our message for today. And yeah, I'm looking forward for our next podcast. Awesome. Thanks.